policy, like paying a capital gains tax increase. But that being said, if we didn't look at the level of improvement of stocks for the last 2 years, but just over the next 12 months looked at what lays ahead, I think someone can be optimistic because we know the Fed is cutting interest rates, but at a time when the business cycle is still healthy. So in the 7 times the Fed did cut while we weren't in a recession, markets actually did really well over that period as cost of money falls. And the second is that I think some uncertainties have been cleared up. I think so much of the summer, our clients were sitting on cash and getting nervous. And you could see it in the VIX index because they didn't know who was going to be president. But now that election is behind us. And while I don't think anyone knows what policies are going to emerge, because there's a lot of radical policies being offered, including cutting government spending, et cetera, I think it's going to create opportunities for many companies. And I'd say that the way we would sort of look at that is we'd want to be looking at smaller cap stocks because they've really been held back the most. And the third thing I guess is constructive is gain as supplies cut starts to happen towards the end of this year and then into next year. And I think that has supported why we expected Bitcoin to be 100,000. And over the next 12 months, I think something over 250,000 is possible, but maybe highly probable based on just following this price cycle. The second reason I think Bitcoin has maybe more upside than that is because the new administration has run on a pro-Bitcoin platform. And I think that the possibility of the U.S. not only legitimizing Bitcoin, but making it a strategic reserve asset, I think raises what would be the possible price scenarios for Bitcoin. Because if the U.S. government, as they intend, ultimately gets to 1 million Bitcoin, they'll be the largest holder of Bitcoin in the world. And they'd exert enormous positive influence on legitimizing Bitcoin. And maybe I would just add to that, it's almost like take Bitcoin, Ethereum, and Solana, because we put those largely in the same category as like sort of core cryptos.
Mm-hmm. Yeah.
We are also entering what I think is alt season. Next year is really when I think the crypto market could broaden. And this is where those who are really experts on crypto, and I know you run a crypto fund, actually are going to have some alpha, because that is actually when many altcoins could do really well. I think that the stronger Bitcoin is, the stronger the ecosystem becomes. And so many of these utility tokens and things that are tokenizing really start to have a lot of expected value. But I don't follow this as closely. Sean Farrell is much closer to sort of how to play alt season, and of course, Skybridge.
Well, I mean, listen, we own things like Avalanche, we own Polkadot, we own Solana, we don't
on products would be, of course, very economic. It would just create so much turmoil in the economy. But what I have heard from Chinese manufacturers, because I was on the West Coast this week meeting with some, a group of businesses, is that China has already reduced the tax refund for Chinese exporters, meaning like someone who makes an air fryer, if they were getting a tax refund from the government, that's how they're subsidized, that amount is reduced. So they're essentially rolling back the subsidy. And I think that will have the effect of negating the need for tariffs, especially because I think China's economy is a bit weaker. So if those tariffs were designed to get China to not try to engage in hostilities economically, I think it's actually probably working. I mean, that may be a surprise because I'm not sure it's widely known. I asked a lot of folks if they'd heard this, but that's what I've heard from a manufacturer. And then
I think the market is,
they're just simply trying to keep a lot of dry powder in case they need to make cuts later. And so I think their strategy is, makes a lot of sense, but also I don't think it's negative for stocks. But yes, I mean, it's going to be, as you know, like a lot of well-known investors have warned that, the U.S. does have a more tenuous fiscal position. So I think that's why the Fed is going to be very important in the next few years, really trying to contain market fears.
You've previously predicted that the S&P would reach 15,000 by 2030. And what I loved about what you said is it would be factors like Gen Z finally entering into the market, advancements in AI. You sticking with that? Have you moderated it in any way? If so, how? And what are some of the key drivers that support your forecast?
Yeah,
could military adversaries of ours get a hold of it? Could someone figure out how to put an artificially intelligent worm into our Pentagon or our power system, or are you just not worried about any of that?
I would say, if based on my conversations with our clients and with other sort of folks following this, I do think we're underestimating the negative consequences of AI.
Okay.
Anthony, foremost because in a human, like in our human intervention endeavors, we work with ethical boundaries, because even though there might be a shortcut, like let's say you're waiting for coffee, you wait in line and other people are in front of you, but in trades that trick people and spoof people, and there'll be fake headlines because that's how you manipulate markets.
All right. I mean, it's great stuff. You've laid out a bull case. You've laid out the crypto case. You've given us some common sense on interest rates and tariffs and taxes. Let's go to the questions. If inflation makes a resurgence in 2025, as some have speculated, do you believe Bitcoin and crypto assets could act as reliable hedges, or are there better options? This is Juan from Florida. Good question, Juan.
Juan, hi. Historically, hedges for inflation have been land, like owning real estate, owning gold, which I think is still valid. But I think now there is hedges using crypto, because crypto is also hedging against dollar and currency. And now there's a Fed put, and that supports small caps, financials and industrials, and Bitcoin. And so, of course, the AI trade, I think, remains strong. It didn't need a Fed put or a Trump put. Those are the four things.
Let's go to the next one. Tom and Anthony, how will Trump's reindustrialization strategy affect liquidity in the coming years? Harry from Switzerland.
I'd love Anthony's views too, but I just share that I know onshoring is something that the U.S. is pursuing, like de-globalization. I think that's what you're talking about. I'm sure companies will do this if it leads to higher profits. I think a lot of people look at this as companies are going to onshore, and there's like suddenly inflation in America of Bitcoin. But as Bitcoin has risen and MicroStrategy stock has gone up, it's created an opportunity for them to issue convertible bonds and debt to acquire more Bitcoin. What's been novel is that they've issued these debt securities for almost no interest cost, essentially COCO, zero interest bonds. And so they're funding this without having to actually pay for the interest expense. Now, you might think that this is a little bit reckless, but it turns out it's a very novel strategy because they have created a lot of network value. They're one of the largest holders of Bitcoin now, and ultimately they may become the second largest holder of Bitcoin after the US government. And they're doing this with the ability to borrow at very low cost. You might wonder, why are bondholders' demand for technology has nothing to do with being in favor with one political party or the other, technology companies. like the Mag 7 have just changed the world, and they've become really important. So I'd probably say that those two are your safest. And of course, the third would be gold, because, as the split election went underway, gold actually did very well as people worried about election outcomes.
I mean, it's a great answer. I don't really have much more to add to that, and I feel the exact same way. Let's go to the next question. What's your perspective on the risk of over-concentration in specific sectors? Like Anthony Scaramucci, as an example, has 55% of his net worth in Bitcoin, especially when the recent market has rallied. So what do you think? First of all, am I crazy to have 55% of my net worth in Bitcoin? And then what do you think of Sally's question?
Yeah. Anthony, I think the